Friends, have you ever wondered how much money FinTechs have raised? Hold on to your seats. It's over $38 billion. And that is just counting equity rounds. That's roughly 20% of India's union budget. Just imagine that. But here is the kicker. With the funding winter setting in, the big question now is, are FinTechs actually building value with such huge money? And what happens after they do? What's the biggest challenge they face? Is an IPO the only way out for investors? Stick around and we will dive into it on all today's episode of the BFSI Show. FinTechs grew way faster than anyone could have imagined. Think about this. Over the last 100 years, we have built around 150 to 200 financial institutions, including banks, insurance companies, mutual funds, and top NBFCs. But in just last 10 years, we have launched over 10,000 FinTechs, of which 8,908 are currently active. That's mind-blowing, right? But here is the thing. We now have more than 24 unicorn FinTechs. Some of them are already listed. But the question is, the million-dollar question is, how will they build value? And more importantly, how will they cash in on what that value is? According to BCG's report on FinTechs, the funding winter is stabilizing. Investors are still willing to pump in capital into FinTechs that are truly unique. But let's be real. The game isn't just about raising funds anymore. It's about creating value. Remember, when FinTechs were all about GMV numbers and customer counts, they quickly realized that the cost of acquiring customer was sky high and it wasn't giving them the returns they expected. So when the funding dried up, they shifted focus to what really matters. Yes, profitability and sustainability. That's the kind of value every FinTech is chasing now. So what's the way out for shareholders and investors? Well, let's break it down. I would say there are two types of investors out there. The first group wants to play the long game, building a profitable, sustainable business. That's part one. The second group, they're looking to build quickly and then cash out, maybe through an exit. So where is the exit? What are the options for those looking to exit? Honestly, there aren't many. For those in it for the long haul, an IPO seems like the way to create value for shareholders. But it's a long road. Just look at Paytm or Policybazaar. They went public, but post-listing issues are a whole different story. I have a great anecdote here. I spoke to Chris Gopalakrishnan, co-founder of Infosys, and he had something interesting thoughts. He said, the ecosystem of new business is absolutely necessary, but every single one of them is really not a large idea or a big idea. And those who have a small idea or an incremental idea should actually start thinking about consolidation or mergers and acquisitions, etc. Because when it comes to an IPO, only the best of the best goes to that route. What about the remaining? They will have to be absorbed in the system. Mr. Gopalakrishnan also said that 85% of startups end up getting acquired in the West. So what's going to happen to the FinTechs that aren't IPO material? Is a big question, my friends. Will they get acquired or will they just fade away? There aren't many options out there. Remember, we have got around 10,000 FinTechs out there, all at different stages. Along with innovating and building profitability, now they need to also think about alternatives for their shareholders and investors to exit before it's too late. The clock is already ticking, my friends. Thanks for tuning into the BFSI show. Don't forget to like, share, and subscribe for more insights. See you next time.